They talk about American homeownership being, quote, the American dream.
Right.
And that was a concept developed by the real estate industry.
Right.
Or maybe hijacked, if you will.
Yeah.
Is it still alive for a 25-year-old?
It is. And, here's one thing that I will say, and, clearly, once again, maybe unpopular opinion is the fact that it's like, it's always a great time to buy. It's like, that's not true for everybody, and sometimes it's a matter of timing for that person. It's not about the market. The market's going to do what the market's going to do. But it's ultimately, is it your time to buy? And that's the more honest way of approaching it, of just going, hey, it still really is one of the best ways to build wealth. There still really is, a way to set things up for not just your family, but families to come. But you got to do it thoughtfully, and you can't jump in half baked and not know what lies ahead, right? Because some people, especially people on my side of the equation, they only get you to the closing table, and then they're like, "All right, good luck." Right. And my thing is like, "Hey, let's really think thoughtfully for down the road, not just this transaction, but what does this set you up to do?" And with that being said, it's still very much alive. It just looks different now. I think the one thing that if I can ruffle anybody's feathers, or at least maybe hit them with a loving hammer, is the fact that it's like, hey, if it's your first house, it really shouldn't be your dream house. Because here's the one thing: if you jump in, and it's not just about cost, but if you get everything that you wanted on that first go round, you won't appreciate the actual dream house. And, hey, start with a starter house, almost like practice, right? There's a reason why that firstborn, that firstborn kid, they get away with a little bit more. It's because they had more things happen to them, because you as a new parent didn't know what you're doing, right? With a house, that's your first baby of a house. It's like, hey, things are going to go wrong. So why not it be a little bit more affordable? And then, hey, you know what? Now that the plumbing has shot through the ceiling, and we need to replace all this and do drywall anyways, I was like, now we get to paint. Great,
So good way to look at it.
Yeah.
So on that same wavelength, somebody who is in their mid-20s or something like that, maybe 2 or 3 years away from making a decision,
right?
What do they need to be doing now?
Oh man,
prepare.
Yeah, study up on your credit. First thing, study up on your credit.
Give us a crash course real quick on credit. What does it mean?
Yeah, really good. So I'll give you 3 tips. Number 1, free annualcreditreport.com. You get a copy of each one of the Experian, TransUnion, and Equifax credit reports. Review it, see what's on there, and ultimately, if you don't have any credit, then unpopular opinion maybe, but take out a small gas card, or take out, if they're sending you something for a secured, Visa, whatever, you don't have to run it up. Literally, guys, you could spend $5 a month on this credit card, and then you wait until the statement comes out. As soon as the statement comes out, pay it off, and just keep building credit. Second tip is boost.com or experienboost.com. I don't know who doesn't, but maybe there are some people out there that don't have a streaming service. But if you have any streaming services, if you'll tie your account to that streaming service, you'll actually get positive points towards your credit score every month. So it's passively giving you, and you can tie your major
utilities.
Your utilities, your cell phone, your insurance. You tie all this into that, and then the third would be, be mindful of just the biggest thing is 30-day late. You could be a couple weeks late, but don't be 30-day late, and those are the biggest things. And I tell people, the only thing about credit that you need to remember, it's a time game as to where, if you do have something bad happen in your credit, it's only a matter of time before it gets better. And you just need to keep monitoring it. Don't pay to monitor it, because you can do it yourself, You want
to have a fat file.
Yeah.
And it's like the whole breakdown of the credit score. Rondi Lambeth, who's a guy out of Vegas, you had him on the podcast years ago. We talked about he did a really great breakdown of what the credit score really means. Like an 840 is just like all the different points of a credit score is your likelihood of paying something back percentage-wise. There's an 84% chance on an 840 score that you're going to pay it back.
Right.
And the lower it goes, I just think of it that way.
Yeah.
Yeah.
Yeah. And, with that being said, the one thing that I always let people know, I go, hey, all finance, whether it's cars, homes, credit cards, mattresses, doesn't matter. Finance is just a measure of mitigated risk. Mm-hmm. How much of a risk are you to let me lend you this line of credit? How much of a risk are you for you to pay back this mortgage? And that's all it is, guys. Mm-hmm. Don't take it personal. Yeah. They don't look at you as a human being. They look at you in black and white on a piece of paper. Right. So if you'll, and I know it's hard because finances and credit are emotional, but if you'll remember that finance is not personal, it's just mitigated risk.
Right. Yeah. There's a lot of people out there, TikTok, Instagram, YouTube, giving out information in all sorts of capacities, especially in the real estate industry, leadership, like we've been talking about. Yeah. What's some mortgage advice that you've come across that absolutely drives you bonkers? Be specific. Anything come to mind?
Yeah, when people are like, "Hey, rates have gotten better, you should refinance." It's like, no. I was like, if it makes sense for you, sure. And here's what happens: everybody gets marketed to. We all do, And some of it, it just hits at the right time. It's like, oh man, I was kind of thinking about this debt consolidation thing, and there's more than one way to skin a cat. Meaning HELOCs, HELOANs, closed-end seconds, what have you. But the whole thing is like, if your rate drops, let's say that you were at 6% and the rate environment drops, and now your rate technically would be 5.875, right? Heck, let's go 5.5, right? So now rates are at 5.5. Is that 0.5% really worth it to refinance? It's not, and not usually. Now, if you got, if you just need this much of relief right now to kind of get you through this season of life, that might last a few years, maybe. But ultimately, at the end of the day, and that's my whole thing, is like, even when I was with my first lender, big shout out to Kevin Watson, when I was with Churchill Mortgage, was the fact that, sometimes they would, hey, they keep saying I need to refinance. I'm like, no, man. I was like, we ran the numbers and you're saving $17 a month. It's going to cost you $5,000 to refinance. Right. Does that make sense? And here's your your break even point. And they're like, oh, it's that far out. Well, the other guy said that, it would be this. I'm like, sure. I was like, you could pay for points. Let me show you how much longer it take you to break even on that. Mm-hmm. And that's it, is that, it's always a good time to refinance. It's like, that's not true. Right. And the other thing is, back to what we're talking about, it's always a good time to buy. It is, but not for everybody. And there's always good deals to be had. That doesn't mean that that's your deal. And ultimately, I've seen the same thing with houses. People, they're ready to go. They got their pre-approval. They're ready to go. And their first house, the inspection doesn't pass, or, they can't come to terms with the sellers, what have you. And I get it. It's a natural reaction. It's emotional, right? They're like, oh man, I really love this house. It's like, wasn't your house. Mm-hmm. And they're like, what? I was like, trust me, I've been doing this long enough. Trust me that your house hasn't shown itself yet. And some people, it took years, like 2 years before they found the one. Mm-hmm. And then they found the one. Yeah. So that's it. And it's like, and I get it in our immediate society of like, everything is right now, right? Oh, ding, ding, that's hard for us to take a moment and temper ourselves. But if you will have patience, your house is out there.